Welcome to Superhero Conversations, a podcast saga with innovation leaders who are at SuperNova, the #1 tech innovation event in Benelux. I'm your host, Dominic Diechuk, and joining me today is Bjorn Tremmerie, Head of Technology Investment at European Investment Fund. Welcome.
Thank you, Dominic.
Bjorn, I really want to discuss a lot of topics today because I think European Investment Fund is one institution that kind of keeps up with the pace of technology and innovation in European Union. So could you tell me your story on how did you end up at European Investment Fund?
Yeah, I was working for a Belgian-based but globally active venture capital fund around the 2000s. And that actually didn't survive the dot-com crisis, if I may say it like that. And EIF found that it was a good experience in terms of having seen how things can work well and less well at the venture capital fund. Given that they're a fund of fund, they thought that my experience in that respect would be good to join the team and on their behalf start making investments in European VC and private equity funds. So that was somewhere 2002.
Fantastic. And let's imagine that our listeners do not know what is EIF. What is that you actually do at the European Investment Fund?
In layman's terms, I would say that we are the financing arm of the European Union to invest and support innovation and entrepreneurship. We do that at scale. It means that we put billions at work. And given that we put billions at work, that is not possible unless you build an enormous team of professionals. We don't invest directly in companies. So the way we want to achieve the scale is through a fund of funds model. We will invest in venture capital funds or private equity funds. We select the teams that will manage those funds. And then they will, on our behalf and on the behalf of other investors, select the best possible startups, new ideas, fund them with hopefully a positive outcome that it will become a real successful company that employs a lot of people, that can demonstrate that Europe has its place on the global innovation map, and that actually we can also support new technologies coming out of the European Union.
Fantastic. And maybe you could give kind of more explanation how the fund of fund model is different from the classical limited partner investing in a VC fund model.
It's actually the same model in this. We are indeed limited partners. We build a portfolio not of companies, but we build a portfolio of funds. And in that respect, we are as any other limited partner that would make a selection of private equity or venture capital funds that they want to invest in. We do the same. The thing that sets us apart from other limited partners is that we're mission-driven from the perspective of the European Union. The mission being supporting entrepreneurship, supporting underserved sectors, supporting underserved stages, and also regions. We want to make certain that anybody, anywhere in Europe has access to a funding mechanism to fund a new idea that he or she may have.
I think the second one that differentiates you, that's the money sums that we're talking about are much larger on a bigger scale.
Definitely on venture capital, less on private equity where you have very big players as well, but on venture capital, and it's not about being or taking proud of being the largest, it just happens to be that we are the largest financier on an annual basis on technology. Depending on the year, we're investing 3 to 4 billion per year in European venture capital funds. And in its totality, over the last 20 years, we've built a portfolio of hundreds of venture capital funds with a total amount of invested capital under management of close to 25 billion.
25 billion.
Yes.
I could not imagine. I don't know. I haven't learned these kind of numbers in school. This is great.
We started smaller, of course, and over time, as we started investing, as we started to see more development in the market, as the market was also getting more mature and hence warranting larger amounts, we've been able to adjust the investment volumes upwards in line with the needs and the policy objectives that we had.
Mm-hmm. And a naive maybe question from myself, but where do you get the money from?
Multiple sources. So we do have our own balance sheet. So we are owned 60% by the European Investment Bank. And that is basically the European member states, the 27 member states. Then we're owned 30% by the European Commission. So again, the European Union member states. And then we have 10% of public and private financial institutions. So we're the only European institution that also has private shareholders. But that is only our own balance sheet money. With that balance sheet, which is AAA rated, 7+ billion, we then attract mandates from 4 sources. The first source is from our majority shareholder, European Investment Bank, that on an annual basis gives us close to 2 billion that we can invest on their behalf. That's out of the profits of the European Investment Bank. Then every 7 years, our minority shareholder, European Commission, develops multi-annual framework operations, 7-year budgets, of which EIF also receives a portion, and these 7-year programs send billions of euros in our direction that we then need to manage on their behalf alongside determined sectors. We also manage mandates on behalf of member states of the European Union directly. So we manage close to 8 billion for Germany, over 1 billion for the Netherlands. We have programs in Italy, in Portugal, in Spain as well, in the Baltic states as well, the Baltic Innovation Fund, where there are at least 2 or 3 generations up and running. And that's the third pillar. The fourth pillar is a smaller pillar. We also want to make available our knowledge about the market and who are the good players in certain segments and who are the innovators in certain segments. We want to make that knowledge available also for private clients, for corporates, for pension funds. And we also have a fourth pillar, smaller of course, where we actually provide access to good fund managers out there to private clients, be it institutionals, be it family offices, be it pension funds. And that's anywhere between 1.5 and 2 billion that we have in its totality.
Wow. So let's summarize the 4 pillars. So the first and the biggest is the European Investment Fund.
Bank.
Investment Bank.
EIB, yeah. Biggest, it's the European Commission is they're very big, both of them. So EIB and European Commission.
EIB. Then you have the shareholders.
No, the shareholders are our own cap table.
Okay.
The cap table you need to have credibility to raise that money. So if you don't look credible, you're not going to attract that size. So it's really, if you allow me to summarize on your behalf. So the EIB,
yes,
very important, number 1. Number 2, equally important, European Commission.
Mm-hmm.
Number 3, member states of the European Union. And number 4, private institutionals, pension funds, family offices, insurance companies.
Fantastic. You have been with EIF with over 2 decades.
Yes.
What is the core belief that you came into EIF that you have changed your opinion on?
Well, actually, almost a bit ashamed to mention it, but I joined as a victim of the dot-com crisis, and I started doing venture capital funds on behalf of EIF, venture capital fund investments, in 2002, 3, 4, and the market was really not mature. And I actually had the feeling that venture capital was not something that was going to ever generate returns in Europe. So even myself, having worked for the EIF and still working for the EIF, at that moment in time, I was giving up a bit on the belief that Europe would ever be in a position to deliver returns on technology innovation. Also because EIF also started making investments in private equity funds. And at those moments, the first decade of the new millennium, private equity was really outperforming our venture capital portfolio. And as shameful as it may sound to those who know me in the market, as really someone who's full belief now in the capacity of Europe, also because the market has developed, I think during the first decade, I really had to change my mind, and the market has forced me to change my mind that European venture can successfully be done in Europe. And I think when people hear me speaking at conference passionately and with data points that really show that you can develop really good venture capital funds and then successful investments in Europe, it's potentially something that they wouldn't believe that I would ever say that. But it would be the one thing that I have to say that I really, EIF has changed my mind, and my mind, and the market has proven me wrong as well.
And for all of the billions of euros that you manage, maybe that's again a bit of a naive question, but are you profitable with
Yes.
all? They are profitable.
Well, we have to be profitable. So because we are not a subsidy institution, the European Investment Fund.
Yes.
We talked about at the beginning our mission to foster innovation, to support innovation and entrepreneurship. It's not that we can do that by throwing money out of the window. We have another obligation and mission is to do that mission whilst generating returns. Mm-hmm. So the return-driven mission is also one which is important. The only thing that we might, and not for our institutional clients, but for the first three pillars, given that we need to support a policy mission as well, our mandators are sometimes tolerant that we don't, for them, go after the maximization of profit, but there has to be a profit. The European Commission would perhaps ask that we take more risk and could support potentially a bit lower profit. The EIB is a bank, would perhaps want a bit less risk and a bit higher profit. And depending on what the risk appetite is of our member states programs, there we go from very high risk to also, hence sometimes lower returns as well. But there always has to be a profitable return. Of course, for our private shareholders, we want to offer them access to the best of the best. And then the return target is quite important. And for them, they would expect that we deliver double-digit net IRR returns.
That's good. I think that why I'm asking that is a lot of people might think about European investment institutions as being kind of subsidy driven. Yes. That's what we know. That European Union gives out funds to support the local economies. But here you actually have an interesting structure that you mentioned. You're the only institutions that has private shareholders as well. Yes. So maybe you could walk me through the structure behind EIF. So you have. You're owned by the European Union.
90%.
90%.
Yes. Directly or indirectly.
And then you have the private shareholders. What is the kind of structure of such a decision making? Because I could imagine working together with the government, slow, bureaucratic, I would say, not so innovative in a sense that entrepreneurs could imagine, together with the entrepreneurs and venture capital firms that are complete opposites, fast, pace-driven, and so on. How do you manage to keep that balance?
Actually, the fund model allows us to because you're right, we are well audited, as we should be, because we're in charge of mainly public sources of funding. So there needs to be rules in place that there's no abuse, no misuse, no misappropriation of those fundings, because we're talking billions. The fact that funds investing is not something it's also for the market, even for the private players investing in funds, it's not a program where in 1 or 2 months you take a decision. It is a longer timeline. Typically we take 9 to 12 to 18 months to make a decision. And sometimes private market players investing in funds also take 6 to 12 months. So with those timelines, you can afford to have somewhere governance bodies and decision-making bodies which are closer to the description that you have given than fast-paced, I need a decision overnight, or tomorrow we need a decision as to whether we're going to do a capital increase at company level. That's not the timelines and the environment in which the fund investing in fund business works. So we're a bit saved, and it's really saved by the fact that the fund investment market allows for lower pace investment decisions. And other than that, we're not that really different from an insurance company taking a decision to invest in venture capital fund XYZ. Now, of course, our decision-making body is depending on which mandate we approve. Our most frequent decision-making body is the board of the EIF, the board of directors, which has representatives of the EIB, has representatives of the European Commission, and has a representative of the smaller group of public and private smaller financial institutions. That works perfectly well. They have been knowing EIF for 20, 30 years. So they're acquainted with the way we work. They're acquainted with the decision-making processes. All these board members have people that brief them on the proposals that are landing on their desk. So they're fully briefed and knowledgeable about the investment opportunities that we invest in. Now, for other mandates, for the member states, for instance, sometimes the member states have a veto right, or they put in place their own investment committee. And then we actually present the investment proposals to those investment committees. And then it's a different decision-making body. It's not our board. But what is always important, even if we present it to an external investment committee, it is still the powerful know-how of the EIF, internal machinery of fund selection and filtering, our investment teams, but also our risk managers, also our compliance teams, also our legal teams. This whole machinery working together actually filters then the best proposals, even if it's not for a decision to be made by our board, but by an external committee, like for the Baltic Innovation Fund or for the Dutch Venture Initiative. Those are then external committees where also the member states or the clients have a say.
I'm curious about the funds. So for our listeners to understand, so you have this big EIF, European Investment Fund, and then you have smaller funds that are kind of dispersed throughout the European Union. Could you kind of take me through, for example, why did you decide to do a Baltic Innovation Fund all together with the Baltic states, not only in Estonia, for example, and how many there are?
That is really driven by the market opportunity we see, so a market gap and an opportunity, and the ambition of local or regional countries or even regions. We have one for the region of Bavaria and Munich as well, which is it's regional, but Bavaria has an economy which is the size of the Benelux. So there it made sense as well. So we sometimes team up because we can double down. So the countries make money and make money available to invest. And they said, look, we're going to make money available if you also want to match that with some of your money. And then together you can mobilize a bigger pool of capital. So that by cooperating, we unlock money at governmental level and also at EIF to have a more specific focus on a specific region. If we didn't have that, we could not zoom in as much as possible as we can now on the Baltics, because we would have to have the pan-European view. We would do a little bit of the Baltics, of course, but we would continue to spend our money or invest our money, that's the better term. If we're not spending it, we're investing it in other countries as well. If then we team up with a region or a conglomerate of countries or cooperation of countries like in BIF, we have a program of 100, 200 million in function of the size of the program, and to say that has to have an increased focus, not the pan-European focus, but the increased focus on the Baltic states. And with that increased focus, you can do a couple of things. You can unlock new initiatives. People will say, hey, there is this program in place now. All of a sudden that sparks people to set up something. You have already people that may have had a fund structure that say that's beneficial. I have a more relevant source of funding because I'm doing exactly what the program is set to do. Or you may spark people that say, hey, this program is set up to bring more players to the market. I think that this is a program that actually I can leverage on to set up a new fund, and that allows us as well to execute on the program. Because if it's to do and fund what is already fully existing, then we're not bringing something new. So by teaming up, we mobilize more money with a more specific and focused approach to a region. It could be a sector as well. We sometimes set up sector-focused funds for AI or for space. But it allows us to target more specifically regions or themes or sectors.
Mm-hmm. And yes, for the context, how many funds there are? We
have more than 100 programs.
Wow.
Yes, a variety. Some even only for the European Commission, where we manage more programs. Some for already, we have the Baltic Innovation Fund 1, 2, and I think we even have the third one. We have the same in the Netherlands. We have 4 programs for the Netherlands. Okay, they each have a specific timeline. They don't overlap, so it's one successor after the other. And that allows us to still being operating at the global, well, not global, pan-European scale, but then also zoom in more regionally and more theme-based, based on the need. What we don't do, if we don't believe that the zoom makes sense or can be successfully done, if we think that it's too close to subsidization, we're not going to do it, because then you're more doing harm to the market than good.
Fantastic. And every region in Europe is covered by some sort of fund in that.
If it didn't have a specific dedicated mandate at the region level, at least we still have our pan-European mandates that need to make certain that there's no region that remains uncovered.
Mm-hmm. And in the fast-changing pace technology world, you mentioned that you have a technology or a industry-specific funds as well as AI, for example. Could you walk me through the process of actually opening a new program, opening a new fund? When do you actually kind of understand now is the time to do this new thing?
It's a cooperation, it's a dual way street together with the European Commission or policymakers. Of course, we're an executor of the policies, but we also need to contribute to strategic thinking of what would be needed. So there we're in close contact both with EIB and with the European Commission. So for a couple of years, it has become apparent that AI is something that for the sovereignty and the autonomy of Europe, we need to do something. The same on space. If we want to be able from Europe as well to send our satellites in an autonomous way to space, you need to have your own. We have Ariane, but it could be useful to have something similar as a SpaceX in Europe as well. So then we talk about that, and then there's working groups that do an analysis of the market, and if indeed there is a need identified, we will engage, and they're going to set up perhaps first a smaller pilot to see whether there's really appetite, whether we can put something in motion. If the pilot identifies and confirms the market need, then we set up a larger program. So we have that for AI, for semiconductors, for space. We've had one for blockchain in the past. Now increasingly the focus is also on the defense side of Europe. So also there we have now 175 million defense equity facility by one of the DGs of the European Commission, DG DEFIS as it's called.
Mm-hmm. And could you explain what is a DG?
It's a Directorate General. It's one of it's one of the teams of the European Commission. There's I don't know exactly how many, but there's closely 15 to 20 of them, and they cover specific areas. You have the one that Mare is for everything that touches upon the blue economy, seas and rivers. You have Connect on the digital side. You have DEFIS for space and defense, and they all have their areas of making certain that there's funding for the market, that there's programs, that there's policies in place to support the areas of their competence, as I would call it. So we have some of the DGs that make available budgets for EIF for specific sectors, and we have those for climate, we have those for space. Yes.
Fantastic. I think it's a really interesting structure, how you basically use and leverage the European Commission as your kind of sourcing partner. You source the problems or the areas that the money is needed to be invested in for European Union to continue to thrive. And, you don't kind of, you use that and leverage that to make those decisions yourself. That's really interesting. And maybe you could tell me about the institutional investing. You're a huge institution, and there has been a lot of backlash on the European institutional investing into venture capital. So what do you think European institutional investors have done wrong?
I'm not even certain they have done something wrong because they haven't done anything according to me. And this may be too harsh a statement, but we touched upon it beforehand as well. I think they're not doing their duty. We are a big institutional public body to support when sometimes the market is not doing it. But there's so much data now available, and there's so many proof points. There's so many success stories that are available in the market that I still don't understand why big European institutionals, be it insurance companies, be it pension funds, asset allocators, why are they still neglecting at scale the opportunity of investing in European venture as well? So I think the thing that they have done wrong is they haven't engaged. And that's probably one of my biggest frustrations, that despite the data that is now visible, and I'm not talking, you started off our conversation by what is a belief that you have changed.
Yeah.
I had the belief, with the data showing it as well, that early 2000, when I was a victim myself of venture not working in Europe, the dot-com crisis, at a certain moment in time, when evidence is there, you need to change your belief. I have changed that belief because I was seeing on a daily basis that, hey, now you can make good money, good returns, and you can build great companies in technology in Europe. I've been seeing that for 15, 20 years now. I don't understand that they still don't see it. And that's the big, is it wrong? Yes, because they should be in the market, but they haven't done it yet.
Okay, I think that's a perfectly kind of good point. And I think there's already some initiatives of raising the percentage of the funds from the pension funds being invested into the European venture capital. And could you take me through some of the plans, because I think that the future is bright, and it's gonna be good. What needs to be done for the European tech scene and European venture scene to be thriving?
Well, actually, I do think it is already thriving. Of course, you cannot accept the status quo. It still has potential.
Absolutely.
And I think I'm not talking about the size, the absolute size of the market, but to thrive, if I had to, I'm not in the betting business, but if I had to take a bet on which ecosystem would grow faster, and I'm talking about the growth rate, not talking about the size absolute in comparison with the US, I think the growth rate in Europe of the ecosystem will be faster than the US. I have not said that the market will be bigger than the US as an ecosystem, but the growth rate will be faster. It's bound to, because what needs to happen is that we need to continue funding that part. In the meantime, €1 out of 4 invested globally in the early stages is landing in Europe. So that's already a good measure. But if you look at the scale-up part, the big money that is needed, a Series C round, a Series D round of more than 100 millions, in that respect, only 10% of money worldwide is being geared to European scale-up tech companies. And that's where we're really not good enough. And that's where also I think that these institutions need to engage. We need to make certain that our future tech champions, the unicorns, the $1 billion plus companies or €1 billion plus companies in Europe, that they also get the funding from Europe and are not solely dependent at small scale currently at non-European sources. There we need to, and that's why I'm so adamant on my statement that we need European insurance, pension funds, institutionals to also invest in funds of a large enough size. The US has 100 plus funds with a size of more than €1 billion. In Europe, we have less than 10. You need those to also say, hey, from the Baltic states, a Vinted, or from France, a back market. We also need to fund them with European sources of funding. This is not saying we cannot accept the non-European sources, but let's at least make certain that we also fund those with sources that are coming from us, that we then also, thanks to those investments, have a seat at the table at the board of directors of those companies, because then from Europe, from European sources of funding, you can also steer the direction of that company.
Absolutely. And do you feel that the kind of the geopolitical situation now, that the Europe is kind of getting less dependent from the US, is actually helping the whole situation with kind of moving away from the US funding and more dependent, becoming more dependent on the European one?
Well, there is still this dependency, but there's the awareness that we need to reduce that dependency. And that awareness is now happening over the last couple of, it's not only the last 12 months, I think it was already going on for 2 or 3 years, okay, that we need to be self-autonomous, sovereign, self-sufficient and self-sustainable as well. I think there's an opportunity, a big opportunity there. We see it, and I do think that whatever is happening geopolitically is a big wake-up call, and I think people are not asleep anymore at various levels. Again, we need to be clever in structuring now the products and the opportunity in such a way that we take the right decisions, we build the right products. And I'm coming back again to the institutional investor side as well. I talked about this need to fund €1 billion funds in the market. We have put in place a fund of funds program now. So it's another one of our mandates. It's called the European Tech Champions Initiative. It's an initiative with 6 member states and with the European Investment Bank involved, which is standing at 3.6 billion currently, to really invest in funds with a target size of at least €1 billion to make certain that we can fund with European funds as well then of a size of 1 billion euro, these future tech champions coming from Europe, so that they're not solely depending. So action has been taken already. Action needs to be taken at that stage segment, but action needs to be taken, and it's been taken already at the defense side as well, on the semiconductor side, and that we are capable of supporting our own semiconductor, that you're not solely dependent on non-European chips. We have this fantastic cluster in Eindhoven in the Netherlands with ASML. And there's a whole NXP. There's still fantastic talent as well, and we need to foster that, and we need to build on that capacity and those brains that we have here.
Yes, absolutely. You see that the actual technology and the innovation and the talent, most importantly, is definitely there. It seems that you need to kind of to push a bit, and I think that's why I'm asking about the geopolitical situation. It's as if what Europe was it's what if that Europe was needing that kind of push forward. But you mentioned a lot the big institutional investors and most importantly the pension funds investing, in the European venture capital funds. What's the thing that we could do to make the pension funds actually invest?
We have been asking ourselves the question for many years at EIF. I'm not sure we have fully cracked the code yet as to what the issue is. There's probably a variety of dimensions. I think that the industry in Europe is younger.
Yes.
So Sequoia was created in '72. I don't think we had ever heard of a venture capital fund in Europe in the 70s. So they have a head start. What didn't help is when we first started in the 90s, then really the institutions went in and immediately they were hit by bad performance, because the dot-com has, when we were taking baby steps, we were falling smack on our face and we said, oh, we're not going to do that again. And that has hurt us for a long time. Pension funds and institutionals, they work with a lot of backward-looking statistics. And is it statistically meaningful to look at the last 10, 15 years when the ecosystem is mature? Perhaps they are still feeling that the length on which they can do data, the length of performance is perhaps not there. Perhaps they haven't seen, especially in the current market, there's not enough exits. So money talks. Perhaps they still said, I only believe it when I can touch the distributions. And currently, but also in the US, you don't have many distributions. So perhaps they're not comfortable with the too short history still of maturity. But then I say, at a certain moment in time, if it's risk-free starting to invest, if there's no risk anymore, then you will not make the return either. Yeah. So at a certain moment in time, you need to dip your toe in the water and dive in. And I'm not saying that you need to blindly dive in, but there's 40, 50 managers out there in Europe that have a track record where you can put, they always say, we cannot invest enough money. I can tell you, I can build products. We, at EIF, when I say it's EIF, we can build products, 500 to 1 billion programs that you can invest in a pool of European managers where you're going to get 15% net IRR as an institutional. And I don't think that any of your, the people you report to or your boards will actually say that 15% net IRR is not good enough. Mm-hmm. And that you can really build. It just, you need to take a bit of time to roll up your sleeves and to build a team to do it. And if you don't have the capacity to build a team, speak to people that can build it for you. We can do it for you, but there's market players out there as well that can build an institutional product that will give you access to good fund managers in Europe that will give you the 15% plus net IRR.
So for all the fund managers who are listening to us now, please invest in the European venture capital.
But the fund manager, we would invest in them. But the asset allocators, they need to invest in European venture capital funds, and they need to speak to gatekeepers or people that have the knowledge if they don't have it themselves.
The call to action is already here. Let's talk about the future. What do you feel the tech ecosystem players should do so that the next trillion dollar company is born in Europe? When I speak about the tech ecosystem players, I think there are three main pillars: is the founders, it's the investors, and then there's the political institutions. What should those three pillars do?
Founders are already, they have done, the brave ones that have shown, the only thing is continue what they're doing, continuing believing in Europe, and continuing to spreading the news. Project Europe was recently launched by a group of 125 founders, and together with some fund managers as well. So this ecosystem building and making the story heard, that Europe is not only there to do Europe bashing, that entrepreneurship, innovation, good innovation can successfully come from Europe. That's something where we need to have the founders to spread the news on podcasts like yours, that it is something that we can successfully do. Other than that, the founders cannot do really much. There's one thing I would ask from the founders, though, is potentially have a little bit, because they are impatient, but have a little bit more patience, that Europe could potentially also provide you with the necessary stuff. I already said that the early stage funding you can get in Europe. Sometimes money talks, and when you need to have a bit of later stage funding and then really the scale up funding, have a bit more patience. But I would understand as well, if you don't find that money, that sometimes the one that is giving to you and forces you to flip to the US, yeah, it's difficult. If we cannot provide it yet to you, then I understand. But we need to try to have a bit more belief that it shouldn't always be the case that you need to flip to the US. Sometimes you need to flip for business reasons, but does it really need that you need to incorporate your company there? Is there not a way of moving to the US without moving the whole setup and headquarters? Is there a way to have a bit stronger belief that it can also be done? Yes, you need to be software-wise in the US, the biggest market, but can you do it without having to flip completely around? Can you withstand a bit the pressure of the big American firms to say, yeah, but I want to invest in a Delaware Inc., and if you're not investing in a Delaware Inc., I'm not going to fund you as a as a German GmbH or a French SA or a Swedish AB. I don't know. So that. But again, I cannot blame them if that's the only way to get.
They have already had enough.
So that's for the venture capitalists. For the founders, because they have taken major steps already, and and they're doing already a lot. And then the venture capitalists is really having belief also in Europe. Be bold, be disciplined, reach for the stars. Sometimes, even venture capitalists need to take risks. Hang in there sometimes too. Fundraising is currently brutal. So be patient there too. It takes longer. You need more stamina fundraising is, unless you're part of this group of 40 or 50 managers that actually don't even need the support of EIF any longer either. They can raise without our need to. But don't give up too early, and they don't. Be focused on what your strengths are, and some really do.
And for the political institutions, maybe we can not only talk about the European level, but also country-wise.
But country-wise there, the only thing a lot is being done. It's perhaps for the whole continent as well. What I sometimes see, and I work for a European institution, but I'm also Belgian, and I want to touch on the Belgian part in a minute as well. History has always shown that as Belgian, we were happy to be at critical moments in our history, be able to rely on our neighbors and friends to get out of a difficult situation. So we really have a belief that we're stronger together. Now, what I sometimes find is that many of the countries say, yeah, well, of course we're going to do it for Europe, but my country first. And that is sometimes that's really frustrated for me, that say, but then put it up, we're going to do initiative, but then it needs to be good for my country, otherwise I'm not going to chip in. Sometimes the payback to your country will happen, but perhaps not in the immediate tangible day that you want to see it. And that I am very frustrated myself, and I think we have an opportunity now with the urgency, with the geopolitical, this wake-up call, that there's going to start to become this real sentiment that we need to be really European. Why? If we were to think more on and that doesn't, I'm going out on a limb a bit. It's a personal, perhaps more personal opinion, but also very much by my institution somewhere supported, that we need to think more European. Many of my colleagues or colleague friends, the EIFs, the local EIFs, they say, oh, we need to mobilize the local money. And they say, and the local money needs then to be invested here. Yes, but you cannot build a strong Europe if every money that you unlock is then only invested in one of your home country. You need to unlock also the potential to look cross-border, because sometimes it's not bad that a fund that is a French fund manager but can invest pan-European is also investing in a German company. And if you tie it too strictly to regional pots of money, it becomes uninvestable. So that's something I'm missing a little bit, the really European flag. And I like once when it was the Olympics, you always do the counts of the medals. And then it was always US and China. But if you were to put the European flag on there, Europe would actually have the most medals. And of course, as a soccer team, I will always support the Belgian team. And you can still have that. But why can't we build a more European sentiment? I cannot imagine that a Texan is that much similar to somewhere a Californian or a New Yorker. Are they really far more alike than a Belgian with a Dutch guy or
Estonian with a Latvian or a Finnish?
Yes. So we cannot be that dissimilar that we have to. It's a bit more philosophical, and forgive me, but that's the one part. If we were to build, the one thing that I sometimes find frustrating is that we want to set up. We're not yet. We're still a club of 27, and we're not yet this, European identity. And I wish we managed to have that more. I wish we had that more also when we're putting programs in place, because we need it ultimately. And that doesn't mean that you have to be Belgian and I have to be Estonian. We can all still have our own identity, but under perhaps a broader European continental identity as well.
I think that's actually a really interesting point that you made. And I totally understand the decision makers here, because you were elected as a representative of your nation, and it's often hard to make long-term investment rather than choosing an investment that will benefit your country almost immediately and will not take into account the broader European level. But if you have the notion of United Europe, then I think it's either you are in the bus altogether, or you're in the motorcycle.
Yeah, indeed. But again, it's a more philosophical. Here, I'm less speaking on behalf of EIF. There's also a person, but you asked me what I thought needed to be done, and I think there's sometimes, if we want to be agile in this, and I do think that the pressure and the urgency is there, that will force us to you see that. I don't want to talk about the geopoliticals, but already really the funding parts, the need to put funding. The Draghi report is just a fantastic report to show the urgency and what can be done. And it's not just the 800 billion. And by the way, 800 billion per annum, that's massive. So that's the Mount Everest that we need to be able to climb. And that's the ambition level that was put very high. And if we need to mobilize those types of money, it cannot be my country first. Under the label, I'll do it for Europe, but my country first. That we need to get away of a little bit.
Let's get a little bit more concrete and a little bit more hands-on. Maybe the startups and the whole venture capital thing is all about doing mistakes and all about failure, about trying, testing out. Maybe you could share some of your kind of failures and fuck-ups that you had with us, because usually, VCs and institutions are those kind of big people that never make mistakes, but I'm sure that you have.
We have, and I would actually, I think we need to, if you allow me one more sidestep, I think we need to increase cultural-wise the tolerance towards mistakes. Startup worlds, my venture capital funds, you take risk, and failure should be part of it. But failure as a positive, because you have taken risks, you have tried something. Okay, you tried to walk, you fell on your face, but you stand up again and you try better. And then perhaps if you try enough, you'll be not only walking, you'll be running. So failure is not bad if it's by trying to do something new.
Yes.
So I make mistakes on a daily basis. EIF makes mistakes as well. As long as you learn from it, And making a mistake is not necessarily wrong as long as it's in line with the mission, the risk-taking that you're asked to do. Of course, we have turned down funds that were hugely successful. And sometimes it allows us then to invest in the second generation of that fund or even the third. We are never too big an ego to say we were wrong there. We never close doors. So yes, and then sometimes they don't ever need us again because they were successful, and I'm happy for them. Then okay, they have proven us wrong and they were successful. I have one case in Germany, one of the most successful first-time teams that we wanted to invest, we couldn't agree on terms, and they're one of the most successful ones now. And I'm happy for them. And I've also made, with our team, we've invested in funds that at the end of the day weren't successful. I wouldn't call it a failure because the team has tried everything in the right way. It wasn't a failure because they went on to fraudulent behavior. It was just they made the wrong investments. The investments haven't returned. And then, sometimes it's bad luck. Sometimes they failed return-wise on the first fund. We didn't see that it was not going to return. And we did invest in the second fund because we thought, so far so good. They're executing alongside the program that I sold, but at the end of the day, it didn't return. But in the meantime, the second fund that we invested in, because they were good, they were professionals, the second time it already delivered returns, and they didn't get the returns on the first fund. And then you can build on that, the second step. And then sometimes you have really funds where you got it wrong. The teams, first-time team, they weren't getting along. They split, and then you do damage control. But you cannot blame. I would not label that as a mistake. We took a wrong decision. As long as you learn from it. And also there, you also need to take accountability and responsibility. We have teams in place, we have contracts in place. If something goes sideways and wrong, we will also, and that's also a job that we take vis-a-vis the private market investors that invested alongside us, we will also roll up our sleeves. If we go on the wrong side, on the wrong tangent, we will take responsibility and help to work it out, recover money or restructure a fund. That is also responsibility we want to take.
And we were talking about the big funds that are coming up now, and maybe you could bring out some regions that you feel that have a lot of potential and that you are kind of investing actively in now.
We don't over-allocate or under-allocate regions. I think historically, if you look at Europe, there's 3 or 4 regions that have, you would say almost, those were the ones you mentioned. It's Western Europe has historically had a stronger development and ecosystem and a certain level of maturity. So the UK, the Nordics, France, Benelux, Germany are regions that have historically delivered very good returns for EIF. But if we start seeing now over the last 10, 15 years, Southern and Eastern Europe has really had a very strong development. One of our strongest exits at portfolio company level has come out of Romania. It's UiPath, a robotic processing automation company. That flipped to the US and would probably end up as a US company now in the statistics, although it was born in and created in Romania, Europe. So innovation can really come from yourself from the Baltics. Estonia is punching way above its weight in terms of unicorns per capita and what have you. So I would single out that is a region that has really created an ecosystem that is doing very well.
And we'll do even more. We'll do even better. We'll punch even higher above the weight.
So it depends indeed how you want to. One statistic that we sometimes look at is as well, what's the size and what has been the growth rate of the ecosystem? So the value of the startups over the last 10 years, then I would have to say Southeast Europe has been one of the places where the growth in terms of value of the startup ecosystem has grown fast. The multiplier on that value. Does that mean that it's where the best opportunities are? Potentially, but we really see opportunities coming out of everywhere. So what I would actually, in terms of singling out one country or region, I would more want to say that innovation is happening everywhere. Every country, even the small ones, is starting to have role models that show to future aspiring entrepreneurs that it's not a kamikaze mission. If you have the right idea, even if you're not in London, even if you're not in Berlin, you might have local source of funding that will kickstart your project, if it's a good project.
Fantastic. And I think there's a lot of talk about ESG now. a lot of transformation is happening in the US, definitely. What should companies expect who want to be invested in by institutions? What ESG factors should they take into account?
I just think they need to be aware that ESG is there. In Europe, you have the SFTR regulation. You just need to be compliant with what you have to be compliant. And you just need to be aware as well that ESG is not just a label that you have to have because you have to have it. I would hope that yes, there's reporting around it, but that just incorporate some of what I would expect the things that just being a good global citizen, be mindful about the environment. If you build that in and you're complying with the regulation, that should be good enough. Just make certain that you have a reporting that can show to institutional investors that this is not just something that you need to do. It's not a necessary evil. They should look at ESG as something that can really boost the business, both from an investment perspective, but also from the fundraising perspective. If you're serious about it, it's not a necessary evil. It's actually a plus. That's what you shouldn't overdo it. There's already regulation in place that could feel heavy enough.
Yes.
Just make certain that you have the infrastructure in place to deal with it. Either you outsource it to service provider that can take care of that. But the more important thing for me is that people are really intrinsically adopting ESG for the good thing that it stands for. And if you do that, you will. And if you're a mission-driven fund, because we also do impact funds, then of course you cannot do the greenwashing or you cannot do the impact washing. If you really want to fundraise from us or from any other party, then normally your returns, because impact can generate a lot of returns, then impact is 100% correlated to returns as well. Then you shouldn't be afraid to attach your return outcome also to your carried interest to actually the achievement of those impact metrics as well.
Mm-hmm. Bjorn, I think this conversation is fascinating. A lot of ideas for all types of tech ecosystem players have arisen. Let's wrap this conversation up with two questions. Since our podcast is called Superhero Conversations, what is your superpower?
I think it's my personal one is my belief, and I think the capacity to operate in this ecosystem with fantastic entrepreneurs, fantastic venture capitalists. I think it's the passion for European venture where I had to be convinced myself first that we could do this. And I think it's my passion and conviction that we need to mobilize large-scale funding for European champions. That is, I think, So
your superpower would be that you kind of want to empower, or you are empowering European funders, European founders that want to build the future of Europe.
And that is not a singular superpower. There's a fantastic team at EIF that is in place to do that. So,
Fantastic. And my last question is, what is your professional dream with your work that you do now?
It would really be that there's a moment in time that people flock into big time into European venture. It's not a dream, it's an ambition. That whatever I've been telling, whatever call out and shout out to the institutionals, that it's not going to take another 20 years for them to be there. So it's not a dream; it's an ambition that in 5 or 10 years' time they will say, "Here we are. Where can we invest? Where do we need to invest? Who are the big players out there that give you excessive returns on European venture?" That really would make me tremendously happy, and I think it would be the best proof point for all those brave entrepreneurs and fund managers out there that they're not in charity land, but in really not only. Success is not only measured by return, but also by the great companies that we build out there, and we have some great ones.
We absolutely have. I think we should end this conversation on this beautiful note. So Bjorn, thank you so much for this conversation, and enjoy the rest of SuperNova.
Thank you, I'll do. And fantastic questions. Thank you for having thought of me to spend these 30, 40, 50 minutes with you on the podcast. It was a pleasure to share my thoughts and to talk with you.
Thank you, Bjorn.